Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Hi, I'm Steve Brotman, managing partner and founder of Alpha Partners. Welcome to Driving Alpha, the podcast that brings you insights from the world's top VCs and investors, and where we explore how they generate actual alpha in their portfolio and in their fund and deliver value in general. So today, we're excited to have Richard Seewald, founder and managing partner of Evolution Equity Partners, a leading venture capital firm specializing in cybersecurity investments. Richard's journey in the tech world is marked by his early investment in AVG, where he played a pivotal role in growing the company to nearly $400 million in revenue over a decade. Over 30 years of experience, Richard has raised more than $2 billion in capital, and his firm is the biggest cybersecurity-centric fund in the world. They've invested in numerous category-defining software companies like Security Scorecard and Carbon Black. His educational background is equally impressive, boasting an MBA from Chicago Booth School, a JD from New York Law School. So join us while we delve into Richard's unique approach to cybersecurity investing and combining deep expertise with his strategic vision for the future. So welcome, Richard. How are you doing today?
Hey, Steve. Thank you very much. Thank you for that tremendous introduction. Look, I'm a big fan of the Driving Alpha podcast. You do a tremendous job in engaging investors and venture capitalists on the nuances and strategies around investing in software businesses and disruptive categories. Love your business model on co-investing and partnering with many of the leading VCs out there on, access to best of breed companies that you're able to add to your portfolio and bring value. Really an honor to be here, Steve, and, look forward to this discussion.
Super. Why don't we start with a little bit of your backstory? I think a lot of folks watching the pod, some of them are not VCs, some of them are entrepreneurs, but I'm just sort of wondering, how did you sort of trip and fall and hit your head and become a venture capitalist in, a minute or two?
Sure. So, 25 years ago, invested in a company called AVG Technologies. And this was post 2000 internet crisis. Difficult to be investing in software business in the wake of 9/11 and post-internet, but we were fortunate to meet a company called AVG Technologies, which ultimately a group of investors, including myself, acquired. We actually bought it from the founder. And moving that forward, we built a company that ultimately we took public on the New York Stock Exchange in 2012. Along the way, made a dozen acquisitions, cross-sold and upsold those products into a multi-$100 million revenue business and NYSE listing. So along the way, in many board meetings, I sat back and said, look, there's an opportunity out there for a specialist investor that focuses on the cybersecurity space that's growing exponentially. And at some point when we exited AVG, I was able to go out there together with Dennis Smith, my co-founder, together with J.R. Smith, Carol Obluk initially, and raise some money and focus on the cybersecurity space. So hanging around the hoop for over a decade, looking at this category, gaining the experience, led us towards raising our first fund. And, now we're on our fourth fund at $1.1 billion announcement we made earlier this spring.
That's an impressive run. In terms of your fund strategy, cybersecurity obviously plays a big role within that. How do you break that out? Are there heuristics that you use in terms of sort of determining if it's a company that you want to back? What are the main keys that you think about as you think about those opportunities?
So stepping back, first of all, in terms of how we think about investing across the cybersecurity and adjacent category landscape. We're investing early growth, and later stage, building a diversified portfolio that exposes our investors to what we think is one of the most attractive software categories today in high growth businesses that are disrupting the cybersecurity space. And when you look at those three separate categories, the team at Evolution has had the experience of building a track record in each individual one. So at that very early stage, examples of companies we've invested in, like Security Scorecard, where we led a seed round and then double, triple, quadruple down across their growth pathway. We were looking, and we continue to look, for experienced entrepreneurs that have the persistence, resilience, knowledge that differentiates them from others in the market. Those are broad descriptions of what we're looking for. There's much more. But I would say that people aspect is extremely important, and understanding the incentives, the desires, the goals of entrepreneurs very early on, extremely important. I'd say the team has an excellent sense of judgment around assessing that. Having looked at that for 25 years, I think, we have a model that we've incorporated into our decision making. However, later on at growth and later growth stage, a lot of that is more quantitative. We're looking at, ARR growth and the ability to do that with ROI in mind. We're looking at scalability of a platform. And I'd say in recent months and years, it's been about assessing Act 2 in a company, where a company may be generating 100 million of ARR, looking to go to 300. And the assessment there is, can this team, can this platform, technology, and market enable a $300 million revenue outcome in the end? So different assessment tools in different categories. The one thing that our team does exceptionally well is apply that assessment tool to the cybersecurity space. And, we've been fortunate to be positioned exceptionally well in this market with a sizable fund to invest in best-of-breed cybersecurity companies.
Got it. So people, and then on the early side, and then more analytical as the bigger the big company gets.
That's correct.
What would you point out in terms of, are there any particular traits on the people side that you're looking for? Not to be cliche, but it's a lot like pornography. Like, everyone knows it when you see it, but if you could, you could elucidate a little bit more in terms of that. And then on the growth side, are there aspects to those businesses that, like the data side, or, that provide bigger moats? How do you think about that as well? So people, and then
on the people side, I think when you sit down with an entrepreneur face to face for the first time, talking about experiences that they've had in the past in the industry, motivations, incentives, I don't think these are cliches. These are things that every investor engages in with entrepreneurs at a very early stage. And, again, that drive, that persistence, that killer instinct in an entrepreneur that's looking to build a sizable business is extremely important to set. There's a lot of companies, that are building for that outcome of multi-billion-dollar outcome. That's where our focus is. We're not looking for point solutions or single product companies that may not be able to reach that outcome. It's really looking for that entrepreneur that has in mind a category leading business in a segment that has significant total addressable market, and they're able to execute on that.
this is a topical point. There's been a war in Israel over the last year. A lot of cybersecurity innovation comes out of Israel. How do you guys think about that? Has it evolved over the last year or so? Do you have a decent portion of your fund invested there? How do you think about it?
Sure. I mean, we've been investing in Israel for a good number of years, and it happens to be one of the most attractive ecosystems for cybersecurity entrepreneurship. We've continued to invest over the last couple of years, investing in what we think are some of the best of breed companies in the world. So we doubled, tripled, quadrupled down on companies that are based in Israel that also have operations around the world, whether it be Europe or the United States. And we expect to continue investing in that ecosystem that has yielded, some of the leading cybersecurity companies in the world today. So we're big fans of entrepreneurs that are looking to build global businesses, and there are many out of Israel that we think qualify for that assessment.
Would you go so far as to say like a crisis there kind of creates an opportunity? I mean, I hate to use the word blood in the streets in this context, but Have you noticed like a fall off in valuations or less competitive atmosphere?
I think quite the opposite. When you read the news today, Sand Hill Road investors have been doubling down, setting up offices, and supporting Israeli-based businesses through in and throughout this crisis. On the M&A side, you've seen publicly listed businesses across the board continue to acquire companies out of that ecosystem. So, we're not alone. And because we're not alone, I don't think you've seen a compression in valuation because of the crisis. Look, we've exited at some very healthy multiples of ARR, which are indicative of the quality of the businesses that come out of that ecosystem. So we certainly look at risks in the environment, assess them, apply that to any investment decision that we make. To date, we've been very positive on the opportunity in Israel.
How does the impact of AI impact cybersecurity in general, and perhaps more specifically with some of your companies? I noted some of your recent deals. Maybe you could mention a few of those as well. And how does that interwove with what you're doing today?
So look, we've been investing in cybersecurity companies that utilize machine learning and AI for over a decade, really since about 2012. And, during that genre, it was about detection and response, being able to apply machine learning and AI algorithms to detection use cases. I think more recently, with the onset of large language models and generative AI, we've seen a number of things happen. Firstly, we've seen on the attacker side that the asymmetries around cyber attacks have skewed even further towards the attacker. Attackers now can utilize machine learning and AI, deploy attacks faster, cheaper, and to be more effective. And that's a game changer when you think about the capabilities now of nation state adversaries, hackers, and criminals to achieve what they want. On the other side, the defender side, where we've been able to invest in some of the best of breed companies that are defending and protecting governments, enterprises, small and large businesses. We've seen the utilization of machine learning and AI increase detection capabilities as well as response capabilities, as well as adding automation capabilities to the infrastructure around cybersecurity that, again, positions us better in the market today to protect the soft underbelly of our society. As you know very well, Steve, soft underbelly of our society is that software layer where elections, our government runs, our social media runs, companies and organizations around the world utilize that software layer. Being able to defend and protect that against attacks is mission critical, and being able to integrate machine learning and AI has become a necessity for a lot of companies. Let me give you a few examples. We led a Series A and then a Series B in a company called Protect AI. And what Protect AI does is enable the builder-developer ecosystem to develop machine learning and AI algorithms in a safe environment. And then once it's put into production, into the supply chain, provide peace of mind that those algorithms are not being manipulated, are engaged with data processes that skew that algorithm, or other attacks that are the environment in today. And then lastly, Protect AI enables organizations to pen test their large language models and security infrastructure to provide peace of mind and an umbrella of securing machine learning and AI. So that's a market leader in this category, which we backed. Ian Swanson, a founder, tremendous serial entrepreneur that came out of AWS, and is really leading the charge in that category. Another company, AI-driven hyperautomation, a company called Torque, based out of Israel, really changing the game in the way security operations automate tier 1 and tier 2 capabilities. And their hyperautomation platform is changing the game in the way security infrastructure is being automated. Watch out for that company. That company is really changing the landscape in terms of hyperautomation driven by machine learning and AI. Last, a company called Halcyon. Halcyon is an endpoint security player that focuses on detection and recovery around ransomware. And as we all know, the ransomware category is growing tremendously. The impact on businesses around the world is in the billions and trillions of dollars as we look at this over the next decade. Halcyon is founded by a very experienced team that built another endpoint security player, sold that to BlackBerry, a very experienced team, and focused on that ransomware problem that is, an issue for every organization and CISO around the world. They're integrating machine learning and AI into that capability. All three of those companies are representative of the opportunity in the private markets today to invest in best-of-breed companies that defend and protect what matters most.
One of the things I often think about, I'm a generalist VC, and so we think about cybersecurity plays a decent role, maybe 20% of our portfolio. I'm often thinking about cybersecurity can often be like a fear sale. Like there's not as much of a hard ROI because you're talking about existential risk. I'd love to get your perspective on that. How do you price a product where you've got existential risk, you've got ransomware on the table, potential threat, you're a multi-billion-dollar international company. I just love to get your 2 cents on that. How does that work out? I mean, I guess it's a competitive market, et cetera. People are offering different solutions and then you have platforms. But yeah, I'd love to hear what your perspective is on that.
So look, there are ROI calculators for many of those products. I'll talk about Torque. When you talk about automation in the cybersecurity space, saving cost while still being effective on the detection and response side is the goal of every organization out there. So there are ROI calculators for operational savings, as well as the ability to save the organization the cost of a breach, which is quite consequential. So pricing that, there are methodologies to price products, pretty consistent with the way other SaaS products are priced. I think when you look at cybersecurity, and it's the number one risk at every board of directors for that we've seen over the last couple of years and into the future, you see the regulatory impact that a cyber breach has. ROI calculation is fairly straightforward when you have a best-of-breed product that is able to meet the requirements of an organization and ultimately the regulator. So we've seen more and more of that. I think the days are gone where this is a fear sale. I agree with you. I think during the first decade, when we were investing in cybersecurity from 2000 to 2010, you turn on the evening news and you'd see a report that there was a hack and, there'd be a spike in sales as a result of that. I think the market has adjusted and, incorporated this into the expectations. And today it's about a daily influx of attacks that amount into the millions each month for large organizations. It's become an everyday decision for organizations to integrate best of breed technology into their cybersecurity stack. I give you an example of Torque, but we could probably apply that ROI calculator to most of the companies that we invest in today.
How do you see, the next couple of years unfolding? Are there certain trends that are catching your eye that you think will continue, new things that might emerge that haven't yet?
So I think one of the more interesting areas and facts is the number of agents that are out there, integrated into organizations that are utilizing machine learning and AI. And because of those agents and the vast number of non-human activity on many platforms, the opportunity to build cybersecurity technology to defend and protect will present new opportunity and challenges, not only on the cyber side, but on the identity side, on the fraud side. These are categories where this fast-moving segment that's growing tremendously will require a fresh approach to defending organizations against advanced attacks. And we're already seeing companies build in this segment and become proficient in defending and protecting organizations against that non-human attack. For the next couple of years, you're going to see that growth move exponentially. And the cybersecurity tools that address it will grow exponentially as well. So that's one area. I think on the automation front, and Torque is at the forefront of this, our philosophy is that if it can be automated, it will be automated. And over the next 3-4 years, you'll see that trend being integrated into every large organization in the world where automation will play an important role in the security operations center. And with that, new opportunities to shift human resources into categories that require a higher level of capability. I think it also addresses some of the challenges that we have in our cybersecurity workforce. So when you look at the cybersecurity workforce globally, there's a number of reports out there that talk about a shortage of professionals in the millions. One way to solve that problem is training, bringing in new people into the workforce, opening up opportunities for women and diverse communities to enter the cybersecurity workforce. The other opportunity is to automate lower value elements of that infrastructure and drive the type of ROI that organizations want to see today. So look out for automation driven by machine learning and AI. It's a huge category. It's going to impact cybersecurity in a meaningful way. It already is. There's tremendous growth in these categories and recognition of the capability of AI and automation. Those are two categories that I'd say at the forefront of some of the opportunities we're thinking about today, and we're investing considerable amounts of capital.
Is it more of a single company that might address these issues, or is it something that your existing portfolio is going to want to invest in agent and automation defense?
I think it'll benefit both. It'll both benefit existing companies who can add automation and machine learning and AI to improve things that they're doing already, but it will also require a fresh look at how to build cybersecurity into this segment. And we're seeing companies do that. So as always, whenever there's a significant shift in opportunity in the technology landscape, as we see in agentic workflow and that category overall, you're going to see a fresh look at addressing fraud and cyber. We're seeing some companies do that who are at top of mind when we kind of look at our pipeline and where this category is going tomorrow. So no doubt, existing companies will benefit from automation. We're seeing that already. We're seeing that in companies that are later stage, where the impact of automation is impacting gross margins tremendously, where they're moving away from some of the human interaction that might have been part of the business model previously, and integrating automation to automate that workflow where humans previously were engaged. Now we're seeing that automation impact, and that has a significant impact on gross margin. And a lot of those companies are on their pathway to going public, and you're going to see those companies, as the market open up, hit the public markets with some very attractive financial numbers and profile.
So on a related issue, I mean, we're all in this to make money. Are the budgets responding? Are IT budgets growing? Are cybersecurity budgets growing? Are they growing at the same percentage? Are they step changing? I've been hearing some rumors about different segments where they're doubling spend this year, or I don't mean to generalize about that. What's your perception there? And it can't go to the moon. You can't have 100%. So what is your feeling about that?
Yeah, great question, Steve. And it's a more nuanced answer. So we've seen cybersecurity budgets more or less stay on par over the last couple of years. That's after a number of years of tremendous growth. What's remarkable is that when you compare that to other budgets, software budgets, tends to be fairly stable through in and throughout cycle. As the adversary gets more sophisticated, it still requires that budget to remain constant and even increase over that time period. But the budgetary shift now include movement towards next generation technology, next generation companies that are addressing advanced attacks, things that we spoke about earlier. So while that budget may be increasing by 2 to 3%, the shift in that budget towards next generation platforms is enabling private businesses, the private market opportunity in cybersecurity, to grow anywhere from 30 to 100 to 200 to 300% year on year in some cases, where legacy platforms who are sizable are not growing at that rate. So when you look at the action in this market and where the growth is, it's certainly in the private markets. And we're pretty excited with what we see in our portfolio and around the industry in spend for next generation technology.
Is any of that, do you think, you talked about automation, is some of that growth potentially from taking out labor out of the process? Because there's a software budget, but the labor budget is much bigger. You think any of that, is that a component? Is that, we're starting to see that in some of our companies, but I was just curious, in cybersecurity, is that an element?
I think we're seeing a shift. So certainly automation across the board, whether it's in cybersecurity or back office audit or legal or, a host of areas, you're starting to see automation impact the workforce. And what we've seen in the cybersecurity space, because there's a shortage of human capital today, a shift to higher value opportunities for employees to engage in at organizations. And, that goes to solving some of that problem that I mentioned, the shortage in the workforce. that we have in the cybersecurity space. So for cybersecurity, the net benefit is to the detection and response capabilities of the organization, because now those resources are focused on those important areas where more human capital is required to better defend and protect. I'd say that might be different for other parts of the software environment where certainly, humans are being displaced. And we see that again in that back office automation trend around, auditing, around legal, around a host of other areas.
So you're starting to see a little bit of that, but not a ton just yet.
We're seeing significant amount in cyber, but as I said, the difference with cyber is that human workforce is being shifted to other areas, and we're still at a deficit in finding enough humans to fill roles.
I think you're starting to see that in other software arenas where people can go to higher level capabilities. It's a war for talent out there, right? So keeping people is increasingly difficult. Speaking of which, let's shifting a little bit back just personally, you've been in the industry for 30 years. What is it that you wish that now, but you wish your younger self knew back in the day?
So I think the advice to myself, if I were able to give that, would be trusting your instinct, trusting your judgment capabilities. You put in the hours, the time, the years of assessing and judging investments and people. And when you pull that together with, the quantitative analysis that we do in assessing companies, the people aspect is so important. So trust that judgment. Is the differentiator, I think, when looking and investing in the venture capital space, assessing founders, assessing teams, assessing new hires, always comes down to that, secret sauce around judgment. And I think the best investors out there are able to choose entrepreneurs, categories, segments where entrepreneurs are able to thrive. And I relate that to anybody in this industry, who's just starting out, who's in the process of building that judgment through the time they're spending. Make sure that you're seeing as many opportunities as possible, as many entrepreneurs as possible, so you can build that judgment engine internally and be able to assess investments.
And I guess that would also apply to entrepreneurs as well, right?
Absolutely. I think entrepreneurs need to be able to trust that judgment secret sauce when, working with venture capitalists, when working with partners, when hiring. Extremely important. And it's one of the elements that, we assess when choosing to work with entrepreneurs. Does that entrepreneur have the capability to drive this company forward and then make the right decisions, hire the right people, be able to choose the right partners to navigate some uncharted waters that are certainly ahead? And again, that goes back to the team's ability at Evolution after 25 years in this industry to assess the right people at the right time in the right category.
Are there any particular, and this is just trying to drive one layer deeper, because people do matter. I just, with myself personally, early on in my career, I put together, structured interviews and passive interviewing. Are there other things that more tactical that you think about as you're interviewing someone or looking for or evaluating? Certainly pattern recognition over many years, but it also we're just curious about that. Are there elements that are tricks of the trade for you? Do you use independent? I've talked to private equity firms that engage whole interviewing teams and cadres. They spend, millions on that. I was just curious from your perspective, if there's anything a little bit more deeper.
We utilize same and similar resources in being able to qualify, in some cases, quantify that judgment that I spoke about. So being able to go out there and work with professionals who can qualify some of the assessments that we made as part of our due diligence process. And it doesn't stop, with making a first investment. It continues into the hiring process. And part of our centers of excellence around cybersecurity growth, which really is an institutionalization of the playbook that we built over the last 25 years in the cybersecurity space, is that quantification of an individual's capability to fit a certain role. And we engage both internal and external resources to do that. Very similar to what you just described. It's part of that centers of excellence that we built over the years. And, our team internally has a good part of that. But again, we rely on external professionals as well to assess an individual's capability.
One of my favorite parts of doing these podcasts is I get to help create a podcast that I actually want to listen to. So, Richard, thank you so much for coming on Driving Alpha, and very much appreciate you taking the time out of your busy schedule. And congrats again on your $1.1 billion latest fund. We look forward to working with you in the future.
Hey, Steve, thanks a lot. Thanks for taking the time today. It's always a pleasure to be here. I look forward to, continue watching your podcasts and working together, perhaps on investing in companies that are changing the game in cybersecurity. Thanks a lot, Steve.
Super. Look forward to working with you, and thanks again. So everyone, thank you. Richard Seewald, founding partner and managing partner of Evolution Equity Partners.
Thanks, Steve.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.